Hey everyone, I'm Matt Dolan with Dolan Divorce Lawyers in Connecticut, and today I'm going to talk about life insurance language in divorce agreements or divorce orders that are issued by a judge. So basically, life insurance comes into play in a few different scenarios. Usually it's when there is alimony or child support. So if one spouse is paying alimony towards the other, they have an obligation to support that spouse financially. And judges will often order that life insurance be put into place to ensure that alimony. So let's say a husband, is obligated to provide financial support to his wife. The court will order life insurance to deal with the situation where the husband passes away. Well, now the wife no longer has financial support from their husband. So the court will put life insurance in place to ensure against that possibility. And the same happens with child support. Obviously, one parent, usually both parents, even the person who is receiving child support will have a life insurance obligation because the person who's receiving child support is generally the primary custodian of the parent. It's the parent who has the child primarily. However, if that parent passes away, well, then the non-custodial parent presumably will have the children to themselves. That they will be the primary caretaker for the child. Well, if the spouse has passed away, is deceased, then they're not going to be receiving child support. So usually in a child support scenario, both parents will have to have life insurance to, insure against the possibility of one of them passing. So sharing my screen, if you were to look at the statute, so we're not going to look at the language specifically, but 46B-82 is the Alimony Statute, and then 46B-84 is the child support statute. So both of those statutes have provisions that allow for life insurance. And just to show you some sample language, this should say life insurance language. So some of the standard language, so you can have language that just says that life insurance must be in place to cover a remaining obligation, the remainder of an obligation. So I gave an example. The wife shall at all times maintain sufficient life insurance for the benefit of the husband to cover her remaining child support and or alimony obligation. So this works when there is a fixed amount of child support or a fixed amount of alimony. So let's say, wife has to pay husband $1,000 a week alimony for 10 years from the date of divorce. So that is $52,000 a year. Times, if it's 10 years, it's $520,000. So on the first year, so at the beginning of the divorce, the husband or the obligor will say the person has a remaining alimony obligation of $520,000. Well, after 1 year, that obligation will have gone down by $52,000. So you would take $520,000 and subtract $52,000, and that is the total that the obligor has to carry in life insurance. So it just gradually goes down, and the same could be in place for child support. Your child support is usually paid until children turn 18. So you can calculate the amount of remaining obligation, and the obligor has to have that amount of life insurance in place. Now, where this doesn't work, this language doesn't work in a lifetime alimony award. So if alimony is paid for life, obviously you can't calculate the remaining alimony obligation because you don't know how long the person who is paying alimony is going to live. And this also doesn't work in a situation where alimony is not a fixed weekly amount, but is instead a percentage of income, for example. So let's say husband has to pay the wife, 30% of his net income for 10 years. Well, you can't calculate the amount the exact amount of the remaining obligation because you don't know how much the obligor is going to earn. So this language doesn't work there either. And what you have to instead do in that situation where there's a bit of uncertainty, you can just fix a set amount of life insurance. So here I just said the wife shall maintain $200,000 of life insurance for the benefit of the husband. So for so long as she has a child support or alimony obligation. And you don't have to have both, obviously some scenarios there may be child support and no alimony. Other scenarios there may be alimony and no child support. So you can tweak this language accordingly. And you can also say that the obligation is in place for a fixed number of years rather than saying for so long as there is an obligation. Sometimes life insurance can become cost prohibitive. So you might want to put in some maximum cost language. So you can say if the annual premiums for the aforementioned insurance exceed, $1,500 per year, the wife shall maintain as much insurance as is available at the rate of $1,500 per year. So you can say, if it exceeds a certain number, then you don't have to get the full life insurance as is required by the agreement. You just have to get a policy equal to the cost. And some people, at the end of the day, some people are uninsurable. If you have major health issues or you're very old, you might not be able to even get life insurance. So that's why you want to generally have some cost, some maximum cost language in the agreement. And then just to speak to that a little bit more. So if in the future, none of this life insurance language is set in stone unless you say it is. So you could put in language that says, the wife shall maintain $200,000 of life insurance for the benefit of the husband. And you could say, this provision is non-modifiable based on a substantial change in circumstance. So you could put in language that says the life insurance obligation is not modifiable, but by default under the modification statute. So this is modification of alimony or support orders, which is 46B-86. So by default, if there is a change in circumstance, you can modify the life insurance obligation. So let's say, you don't have maximum cost language in here. Let's say you don't have this language and husband goes out and gets insurance and realizes it's way more expensive than he thought it was going to be. Or there's some health circumstance that comes up for the person who's obtaining the policy and they can't they become no longer insurable. Or they reach a certain age where life insurance, just becomes more and more cost prohibitive. You can always modify the life insurance, unless, of course, as I said before, there's language in the divorce agreement that says that the alimony, the life insurance obligation is non-modifiable. Now, finally, there sometimes in a child support situation, the parties won't want to have the other spouse be the beneficiary of the life insurance. They'll instead want their actual children to be the beneficiaries. So here I put in some language, some sample language, which is the wife shall maintain $200,000 of life insurance for the benefit of the children, $100,000 per child. And you can obviously tweak these numbers however you want. But it is specifically for the benefit of the children with the husband as trustee, or you can have anybody else be trustee. It doesn't, you don't have to have that, or you can just leave it blank and whoever's getting the insurance can just pick their trustee if it's not expressly written in the agreement. And then for so long as the obligor has a child support obligation. Or again, you can do a fixed number of years. You might want the life insurance policy to go not until the kids are 18, but instead until they're 23. So you can adjust all of this language however you want, but this is kind of the standard basic language that you will want in a divorce agreement for dealing with life insurance. So that is it. And if you have any other questions, feel free to contact our office. We would be happy to talk to you.